Hey everybody, well welcome back to our weekend edition where we cover off on everything to do with the stock, crypto and commodities markets for the week ahead. And what a week we've just seen. History making stuff. The largest one-day crash in Facebook ever in terms of market capitalization size. And it's not stopping yet. We've got a pattern here that looks a little bit bearish, but will fear prevail in the week ahead, or are we about to get greedy and buy that dip? Stay tuned to find out more. It's sure to be a good one. So the best place for us to start today's video is to discuss what happened in the Friday session, and it was up, down, and all around. We had Amazon's result, of course, boosting the market sentiment, but by the time the market had opened, the fade had already occurred. What we talked about on the previous video literally happened during the futures market action. Amazon ended up doing 13.54%, Tesla did 3.61%, and the banks were up for the session. But the story goes deeper than that because we had the big monthly number, the jobs report. And it looks like on the surface, unemployment obviously dropped and we had a huge rate, big beat here, 467,000 jobs. Now you would think, oh, strong economy, things are looking great. But the problem is we're in a point where maybe good news is not so good due to the Federal Reserve changing up monetary policy. If you're not aware, obviously the Federal Reserve is looking at doing many rate hikes this year and potentially as much as 4, bringing the cash rate right back up. And this hurts growth stocks. So what we tended to see was a huge amount of volatility coming into this fact. Now, the Fed is not going to raise rates until March, it seems. But let's have a look at what's going on here. Will we see a double rate hike? Is that something that's suddenly going to become on the table due to these strong numbers? So the markets went up huge off the Amazon result. By the time the actual stock market opened though, it was almost all the way back down to where it had moved. That 200-300 points of push up on the Nasdaq had been wiped off. We then saw a rally through the session, but something interesting happened into the close. This is where we usually see Wall Street start to act, and they sold the close. Now, this could be profit taking for the week, as the week did end up profitable. It could be hedging. It could be any other reason. So we don't look into this Friday one as much as usual, but certainly there was some volatility coming in here. The Dow Jones ended up down or flat, and the Nasdaq ended up 1.33%. The big story though is in the sectors. So when we take a look at what actually happened for the session, it was mostly Wall Street picking up growth sectors, TAN, the solar index, internet stocks, and healthcare and everything like that did okay. But realistically, it was the defensives that were getting beaten around. Things like consumer staples, things like utilities. They did not have a good Friday session. A stark contrast from what we've seen previously in declining days. We usually tend to see this flight to safety, which is consumer staples, and flight to utilities. So this is where our week analysis comes into it. There's no question we need to look at this from the top-down approach. We need to have a look over the weekly data and what is that telling us about what really is being positioned throughout the week. And if we look at this, you'll notice it is, of course, energy, the outlier, the best performing sector of 2021 continues to come through. So does financials, makes sense. Higher interest rates, higher profit margin. But here's where things get really strange. Gold performed 3.75%, yet also all of these high growth stocks, semiconductors, solar, consumer discretionary, they all did actually quite well. They were the best performing sectors for the week, whereas the utility sector, the staples, all of these more defensive that you would think would have been performing better due to the volatility were actually down. This is showing that Wall Street is buying this dip to a degree. And whether we see new lows or not, and we're not sure of that just yet, Wall Street certainly is positioning itself in growth more over the last week of volatility than they were in the previous weeks. Let's take a look at why some of these reasons may be happening. One of the reasons is the options market. If you're not aware of the options market, you don't understand it, make sure you subscribe to the channel because, of course, we do cover this in great detail to do with Tesla, the SP 500, and everything else. And when fear arises, obviously we have two main things going on in the markets, fear and greed. And when we have a lot of fear, tends to really affect retail community traders. Smaller traders have been literally adding to shorts and adding, and the fear in the market was greater than it was during the pandemic low. So that is a higher level of puts were being opened. We knew that this was a sign that probably buy the dip was going to play out. But this doesn't stop just here. It goes much further than that, because the volatility we've always said in 2022 is going to be extreme. This is a trader's year. Day-to-day trading, investing at key levels that you believe in companies and you want to hold them for years. That's the type of thing that you should be looking at. Swing trading for now, when the VIX is above 20, is not the way to go. And if we think about the final 2 days of the January month, when we have these rallies like we saw, we get bad results in the next month. On average, we actually lose 3.1% on the index. There's probably a bigger story in terms of how much we really lose. And this goes all the way back to the 50s. So there's not many times this has happened, but when it happens, it tends to lead to only a 30% up market. Also, down 5% in January. When we get these types of data stats, what we tend to do is spill over into February. And while the next 11 months tends to be relatively positive, which means that our medium to long term should be bullish, we can deal with some great trading throughout the February months. Only 33% of the time is the market bullish throughout February. Let's move over to technology here. We know it's a bit weak here, seasonality. We've talked about this chart almost every day this year, and that's because it's a great thing to look at. And we expect that kind of rally coming through March into April. It's maybe a sell the rumor with the Fed and buy the fact. Another thing that we share on our Twitter here is earnings data. Now, a lot of people don't understand earnings data and what we mean by this, whether there's a beat rate or a miss rate. This is just really the expectations of generally these economists out there. It doesn't matter too much, but when you have a beat season, which is looking at 70% plus come the close, 68 to 70% plus, it generally means that the expectations of the market were met and the price is fair. The key here is not really about these data earnings, it's about the guidance moving forward. So no matter what stock you're looking at, the earnings call, the guidance, that's where the key is. And that's where we've seen many stocks fall over. A lot of stocks that were doing well all of a sudden have dropped. And this goes for things like Facebook. If you actually listen to the earnings call, it's almost like Zuckerberg is like, I don't really know what's going on. I'm going to go over to the metaverse, and that's what we're doing. And he's losing sight of the core business. Wall Street hates that. They've bashed the stock for that reason. The same thing's happening with Tesla, with this idea that maybe they're focusing too much on robots and not enough on scaling their core business at this stage. It's a big problem, and I'm sure many people agree with that out there. But let's get into the technical analysis. Let's talk about the VIX here, the volatility index. And the VIX is still high. It's above 20. We know that whenever the markets are above high, there's that bearish tendency and fear tendency in the markets. Options become more expensive. Volatility increases. Day trading and scalping becomes one of the best ways of doing things. And of course, buying the dip is about buying quality companies that you want to hold potentially for a while, because you may not be able to predict the bottom that well. The other thing that we saw happen on the Friday session, and this is where the concerns of the market volatility really come out, is why is this 2 years still going up? The Strong's jobs number was really led to a bit of the flag pattern coming through. And here's the thing, with flags, we've obviously got the flag itself, the pole length, and that pole length becomes the extrapolated area that we believe the market could get to. So is this predicting a 1.4 to 1.45% 2-year yield rate? This is basically saying that the Fed's over here saying, okay, we're maybe going to do this. The market's saying, well, wait a second, we think that you're going to have to raise rates at even faster rate due to inflation concerns. With any bull market, you need this to kind of come down and stabilize. At this point, it's getting out of control, and it goes the same for the 10-year. 1.9%, we're getting close to that 1.952% marker here, a new all-time high weekly close in terms of the last 2 years for the 10-year rate. So inflation is a big concern here in the markets. We know that at least temporarily, these higher interest rate yields can affect growth stocks. And this is one that we continue to have to watch. Remember, we've got 4 factors to really show us a turnaround. And one of those factors is seeing this yield, this 10-year rate, the 2-year rate coming back down. They have not done that at this stage. So continue to watch this. It's looking like it could be an incredible volatile week with big swings both to the bullish and bearish side for the week ahead. Let's move over to the gold markets. They're clearly confused as well. Big sell-offs followed by large gains. We continue to not be able to break the 1810 level. I think day traders are going to be watching this very heavily for a daily close to show they can go bullish on something like gold or something like silver. And the trend line remains intact for now, but the pressure here on this particular metal is extreme. Huge amounts of hedges going both ways and a lot of manipulation. Not as easy to trade as something like oil, which has finally hit our next take profit. Congratulations. I'm going to give everyone a clap that's been trading oil and holding through. Well done. $92. In fact, almost 93 reached. Phenomenal stuff. I mean, oil, it could be the easiest 2 years worth of trading I've ever seen on this metal and of this commodity. And really, when we think about oil, it's just such a great technical here and so many reasons why it's been so fantastic. But you know where it gets even more crazy? When you think about what happens if it breaches past the 92 level. Because then all of a sudden we start talking about this 103, 104 zone, and we start to talk about, will oil ever go back to those all-time peaks in 08? That was a phenomenal period. Remember, oil got to 145 a barrel. So are we in some type of super boom here across all commodity space? I'm starting to think so. And while oil is at a resistance and we expect this to be a bit of a flip-flop area for it, and we need to watch that, I think this is going to be a key point to watch for the week ahead. It just brings back the point that we have these epic gains going on in so many of these commodities right now. At a resistance, watch the week ahead. If it breaks through this level, comes back down, tests it, it could be a great buy zone for people wanting to get into the space. And if it rejects here, then of course we'll be covering it every day of the next week. Let's move over to stocks, then we'll discuss indices and of course crypto. And we'll talk here about Tesla. And Tesla's in a really weird spot at the moment. It's holding above our long-lasting trend line. Fantastic. Even when the market got underneath, it was quickly rejected above that. And we are fans of day trading this particular stock, possibly one of the best moving stocks in the markets, if not the best at this stage. You'll notice that the daily here has some rejection candles on it. And I think we need to zoom in here and understand what the psychology is. We've got a bit of a bullish kind of looking candle, which actually turns out to be a bit of a hanging man candle. Bearishness that closes right on the same spot. A bearish looking candle, and then some bullish stuff. So clearly the market is trying to figure out a fair price here on Tesla. We have our low sitting around that 880, and we have our high sitting around 942. And this brings us to when we discuss about options, because what do we know about Tesla? It gravitates to these circular numbers, things like $1,000, things like $950. So if we breach 950 this week, where is the logical conclusion for the stock to go to? 1,000. And I think the options market shows this is clearly where people have got interest. There's the 950 strike, and look at this, the 1,000 strike, huge amounts of calls on this. Also, there's some crazy call bets that are really far off. I think these were made into the earnings. A lot of people got carried away. Part of the reason why Tesla is so far down is not necessarily just the fundamentals and what the story is. It's because retail went too bullish on it, and Wall Street doesn't want to pay those options off. So look at this, we've got the $1,000 strike, and then of course we've got around this $800 strike, and even lower, huge amounts of puts. So there's a big range here opening up for Tesla for the week, but $1,000 remains one of those key zones, and 950 to 1,000 should be a good day trade if it comes through. Obviously place your own trades and consider your own systems, but it's an interesting zone to be watching. Let's move over to Amazon, the talk of the town, because of the huge move after hours. This is unusual. You are experiencing something that you don't often see in stock markets, and it's awesome to witness history in some ways because guess what? It's history. It's kind of cool to be there. I've been in many history points in my 12 years here in the markets, and I guess it's actually now 14 years, but yeah, I've been here for a long time. I've seen plenty of history stuff like the Euro Swiss, and of course when they took the floor off that, a phenomenal moment. And I think we've witnessed another one. Facebook and Amazon, some of the biggest switches we've ever seen with mega caps. And this is not usual markets, which again leads us to think, are we in unusual times where the markets will continue to show fear and volatility up until the Fed gives some certainty into the March interest rate game? Well, here's the problem with Amazon. We have a high, we have a low, we have an open and a close, and they're sitting at the same level. So it's a long leg doji at the resistance. We thought there would be a fade. Remember, after hours, the market went even higher. It was like 32.70 or 33 almost. And we suspected the fade would occur. Previous support is too much for this right now. We've got the resistance. You close above here. All right, let's ramp Amazon. If you continue to close underneath here though, do we fill the gap? Certainly a trade that could be open for the week. The gap trades have been very good, and I think Amazon presents this because when you look at the surface, yes, the earnings results there, everything like that, but is it that great? Well, some people would argue maybe not due to guidance. So I think that this resistance is certainly a great level. Day traders coming out, looking for key zones for the week ahead as well. Let's move over to some other key zones. That's ARKK, and this is still in massive decline. So we haven't seen a full recovery here, but something like these hyper stocks are starting to turn around to a degree. Huge volumes, nice support, 20 moving average, the red line here on the breakdown. And if we breach through this 20 moving average, what have we done? Troughs, peak, higher trough, higher peak, 20. That would be a sequence that would pretty much prove to us the first stage of full recoveries in this. And we've argued all year so far that when the hyper stocks turn around, they could be the best trade of 2022 because they were hated in 2021. People still hate them, yet many of you rightly believe some of these stocks, some of them, not all, but some of them are the future. And that is why if you pick the right ones and you get the right turnaround story, you could be in the biggest amount of money for the year. So an exciting sector that we'll continue to follow up on. Also TAN, solar index or the solar sector. This is another one that looks very similar. 20 moving average, troughs, peak, higher trough. Will we get the turnaround story in over the next week or 2 weeks? Here it is. That's how you spot a bottom. I'll be doing a special video talking about spotting bottoms and how to find them. And I think you should definitely subscribe if you're interested in that because it's going to be a great one. We haven't done it yet on the channel, but here we have another great base and a potential for a first stage recovery for a massive sector. And if we think about how much it's down over 43% from just those peaks, not even the highs that were reached before. So some really great gains here in some of these. IWM showing a similar thing. We've got that resistance now. We've obviously got the dip down. Do we create trough, peak, higher trough, and then higher peak? Bulls will be looking for that. You'll need to break through 210. And remember, IWM is the small caps. It's the small 2000 stocks. It's got Wyckoff distribution on it at the moment. The false break to the upside, the sell-off. This cannot be ignored. Until we get through 210, we can't really be sure that it's a broad-based buy-up because this particular sector or index is showing us weakness in the market. It's no doubt showing us the economy is maybe not as good as people suspect because it's done nothing for a long time. It's broken lower. It needs to break high to confirm to a lot of people the recovery is in. Let's move over to the Nasdaq or QQQ. Let's talk about some of these numbers. Most of you are trading this right now. I can see it in the comments. The big swings got a lot of people excited. This is the real market, so it doesn't include the futures action. You'll notice the gap here. But the big thing is, look at where the resistance was, where the support is, where the rally came up to, similar level. It then sold off the 14.8 near the close. And this week, I think we all know where the zones are. Breach underneath this, big weakness could come through. And certainly algorithms will be all over that 14.4 zone. If we come down, break past the 14.8 plus zone, day traders are sure to try to bring that thing and fill the gap. These are the two areas. It's a great time to be in the markets as a day trader and scalper because depending on your systems, we're getting some fantastic levels. And of course, breaking down these levels, algorithms are going so fast and you can see it just playing out here. If we go to the daily, you'll notice as well, you can see the wicks both sides, the buying, the selling, obviously the hanging man candle, the weakness that's ensued since that. So we're not out of the bullish or bearish moves at this stage. We're stuck in limbo land where we've got to be nimble and quick. And the weekly shows the same thing. Buying wicks, selling wicks, stuck in the middle, not very decisive at this stage. The market's volatile, we know that, and it's going to continue to be so, it looks like. Now, we mentioned at the start of the video the evening star pattern on the SPY. This is, of course, the buying, then the gap up, then the candle, then it gaps down, goes bearish, and this tends to lead to further selling. We saw a morning star over here, similar type of candle pattern, one of the best out there, lead to 3 big days of buying. Now, if we get a new low and it closes below that point, not what happened on the Friday session, do we expect selling? I think the answer is probably yes. From a technical perspective, that's what you've got to be looking towards. So at the same time that that occurs, you'll be seeing the Nasdaq going through that support And there's just so much synergy between these markets all showing that. But here's the thing with the SPY is if that does occur, where's the next drop after that point? Well, it could be going back to test 430 and any close underneath 430, because remember, every single one of these has been a wick, will lead to the bears being in full control of this market, getting underneath the 50 exponential moving average on the weekly, one of our best support by the dip areas, which we used previously to get these great rallies. And it's just, it's one of those points that you're going to need to watch. 430, 430, 430 is a key zone for the week ahead. And when you look at the options, it is completely indecisive. The puts are so low. All of the puts that we thought would expire, the market held right above them. Remember, 450 was where all those puts were entered. Guess what? They didn't get paid. That's what we're all about, understanding these market dynamics. They didn't get paid at 450. It all wiped out. Every single bit of profit that they were trying to get, didn't get anything. And then the market expired just above that. So if the market goes short, it's kind of open this week to go short. And we know that around that 465, 470 area is where the calls are. So we've got that upside potential as well. So from the bear perspective, they've got a lot of room that they can move. There's not that many puts open through the 430, through the 420. It's actually well lower than that. From the bull perspective, we'll watch this strike very, very heavily, and we'll come back and continue to look at that one. It's going to be a big deal. Now, here's where markets get even crazier. We had the jobs number, and guess what? Well, if you were looking at our analysis on the previous session and you were trading Ethereum, I got to say congratulations to you. What a fantastic trade. Bam, straight into the 3,000. Fantastic stuff. Supports become resistance. A nice little breakout past this resistance here, this little bullish hammer, and then it was on and it went to 3,000. It's a great sign, first sign here for the crypto markets that people are getting faithful in it again. And one of the things that's strange about it is the FUD was at all-time highs. People were really, really down on crypto. Maybe not NFTs, but certainly down on crypto. The bullish hammer seems to have flowed through for Ethereum. It's not even arguably probably the better chart here than Bitcoin. And the weekly 50 exponential moving average has been hit at this stage. So of course, further bullish pressure, we need to see it break through 3,000, probably come back down and then go towards this level here, which will be the 3350, 3400 zone. That's the next big resistance here for Ethereum. But as we know, Bitcoin really rules in terms of markets, and we've just witnessed something that we have not seen. Even if you put this on a log chart and you have a look at it, depending on whether you're using log or not in crypto, then you'll notice we just broke the trend line down. So this is the first time in Bitcoin's decline that it has broken above. The 20 moving average, also this red line here, broken above. If the market then pulls back, where do we expect to see buyers come back in? The 20 moving average most likely will be met by buyer demand, sitting around that 39,000. So this is a big sign here for the crypto markets. Is it something of a precursor for the stock markets as well? We know where our buys are. We know where our sells are to a degree from key levels here in the markets. We have to remain partially neutral because the markets are in a state of flux, and every earnings result and every day seems like another trading day with a different direction. But we do have key zones, and Bitcoin is kind of showing us, hey, wait a second, we've hit that resistance that we expected to get to, but at the same time, it's broken past and showing the first stages of recovery. This is something that many crypto players out there have been looking for. And of course, at the same time, we have decent volume coming through on it. BTC shorts is not going up. That's also a good sign. So that's not going up. It's stabilizing, if not going down. The whales are not selling off this particular thing right now, something important. And really, the rest of the week, it all comes down to just understanding that we don't have that much economic news until Thursday. That's when we get the CPI result out of the US. And it's mostly earnings and what the market feels like doing. So because it's what the market feels like doing, we're in for an interesting week of incredible volatility, great key levels, and what a time it is to be a trader, scalper, and possibly even investor in some of the key sectors and hyper stocks. We hope you enjoyed the video. If you do, please remember to subscribe. Smash that like button as well, guys. And I want to know, are you a bull or a bear for this week? Because it is going to be an absolute smasher. Let's see, let's find out, and we'll do it together. See you soon.